I used to have several sites. Now I kind of like the grower's edge. It gives me that cash max. You can tell it which markets you're looking for, and it will tell you what your highest net back is based on the price they're paying at that time and the basis that they're paying. And that's pretty handy because I don't have to go to so many different sites.
Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is Wednesday the 22nd. We had the market moving lower here today with corn trading down 4 1/4 cents, soybeans down 7 1/2 cents, and wheat in Chicago here trading 8 1/2 cents lower. We did get ethanol production out today. We also have export sales expectations. We'll talk about that later on in the show. But before we get into that, we're going to take a quick look at the chart, any sort of damage done, and we'll also look at a headline that came out here this morning. First of all, the headline, 120,000 metric tons of soybeans was sold to China for new crop delivery, so that was nice to see. What we know about new crop sales for soybeans, corn, and wheat, all of them are lagging here. Corn and soybeans really lagging somewhere around 55 to 56% of what that 4-year average is in terms of new crop sales during this time of the marketing year. So we're really needing to see additional sales. So this nice 120,000 metric ton sale for China, or to China here, is nice, especially when you couple that with 110,000 metric ton U.S. soybean sale to unknown destinations that came out yesterday. So both of those are relatively positive, but not enough to lift the market. Let's take a look at the December daily corn chart. You'll notice today we printed a low of 410, and we're really not that far away from the 50% retracement. When you draw a trend or a retracement level from the lows that we were back there on in June, and then the highs up there July 14th, you'll notice that that we're very close to that 50% retracement. And my feeling right now, and I've said this a few times, is that I wouldn't, I really don't expect us to see any sort of 100% retracement because I do believe that the damage done in the eastern part of the grain belt is still an unknown factor that still warrants a risk premium in this market. But I do think that we could go down as low as $4. If we do go down as low as $4, I think it's going to be a very strong support. Keep in mind that there's the 100-day moving average. It's also the 62% retracement. It's also that big whole number, $4, which I think will provide some sort of support if we get down around that level. But before we do, we'll have to pass through that 50% retracement, and I would suspect that that would also provide a little bit of buying support here in the days to come. But in general, my feeling is we'll probably chop sideways, maybe drift a little bit lower here as we move toward the August report, unless there's any sort of major change in the weather outlook. Right now, the weather outlook is relatively positive for overall crop development here in the U.S. When you look at the November daily soybean chart, you'll notice that we do have resistance up there around 1030 and 1040, but we're not trading up there right now. Right now we're on the lower side of this consolidation pattern. You'll notice there is kind of an ascending trend line here that we bounced off 2 days ago, and we bounced off again today. Today we saw a low of 992 3/4, which is really right along that little short-term trend line. So keep in mind that trend line is there. It is quite possible that we could break below it. Just because we break below it does not necessarily mean that we're entering a bear market, but I do think it would open the door for a little bit of price expansion, or that maybe some selling pressure here going into the weekend. Now guys, let's take a look at wheat here, because this is a very different chart than corn and soybeans. Notice corn and soybeans both retracement, but we're at least around the 50% retracement to 25% retracement. You look at wheat here, and it looks as though we're almost approaching the 100% retracement. You'll notice that we went right through that 100-day moving average, sliced right through it. It provided absolutely no support, and we're kind of moving right down there to that trend line, and you'll notice that trend line support right around 513. So guys, keep that in mind. If we do move lower again, we could find some support right around that 513 trend trend line area. Of course, we've been moving lower here just because of our competitiveness on the global market. We just don't have the price. The wheat prices are just not reflecting or not providing any sort of real buyers in the export market, and so that's something that's concerning people and causing the market to sell off pretty substantially. We did have ethanol production out today. Of course, ethanol production declined this week, down 11,000 barrels per day to a weekly total of 973,000 barrels per day. This is 101 barrels per day or above the 4-year moving average. You'll notice on this weekly ethanol production chart, the green lines represent weekly ethanol production, and you'll see that we are ahead of the blue line, which represents 2013, and we're ahead of the red line, which represents the 4-year moving average of overall production. And you'll see that we did decline this week. We are still well ahead of where we were last year by about 14,000 barrels per day and about 101,000 barrels per day ahead of that 4-year moving average. Let's talk a little bit about export sales here. This will be coming out tomorrow morning and will likely provide a little bit of a tone for the rest of the trade day. Expectations for old crop corn sales between 250,000 and 450,000 metric tons. Soybean sales expecting anywhere between 0 sales and 150,000 metric tons, and wheat sales between 200 to 400,000 metric tons. When you look at new crop here, expectations for corn range between 300 to 500,000 metric tons, and soybean expectations range between 300 to 550,000 metric tons. Guys, that pretty much wraps up today's show. We're going to want to continue to pay very close attention to the weather outlook. It seems as though weather forecasts are really favoring the fact that we stay in El Nino through the end of the year. That is something that could have some negative implications. Of course, if we continue to get the saturating rains here in the eastern part of the grain belt. But right now, the 10-day weather outlook really seems to favor a drier weather pattern there in the eastern part of the grain belt, allowing some of that moisture to kind of evaporate and some of the excess moisture to just kind of burn off here. So it's going to be interesting to see where we go from here, but like I said, barring any major changes in weather, I wouldn't be surprised if we trade sideways to slightly lower here going into that August WASDE report. Thanks a lot for tuning in. If you have any questions about what we talked about today, please give the office a call. The number is 877-472-4607. I look forward to hearing from you. We'll see you here on Thursday. We'll go over the export sales report.